analysis. Let's take our conversation forward on FMCG and the entire consumption theory with Nasser Salim from Flexi Capital. Hi, Nasser. Thanks for joining us here in our studios. I was interviewing the Nestle top boss, and he was very categorical about it, that yes, like Nestle, his competitors have also performed extremely well in the quarter that's under review. The earnings reflect that. But I wanted to understand from you, as far as valuations go, are we running ahead of the curve, or do you think the valuations that we are seeing are merited?
Thanks, Antara, for having me on your show. Thanks, Antara, for having me on your show. I think, great story as far as the numbers are concerned that came out yesterday. On the FMCG sector space, clearly, if you look at the one-year trading forward price to earnings today, we're at about 46 times basis 5-year historical averages. We are a little expensive at the moment. But clearly, again, from an attractiveness perspective, we have great structural attractiveness which is available, good earnings, good visibility on account of demand pickup. We have rural uptake in the demand which is coming up again on the cards, and good balance sheets with strong moats. And of course, that's what we will actually try to catch over the next few quarters as far as the FMCG space is concerned.
Okay, so you fact that maybe the valuations are expensive. So now let's get stock specific. So if the valuations are expensive, what are you advising your clients? Which are the ones to hold on to at the moment?
We've identified about the pack is quite large, but I'll probably stick to about 3 odd Nandara for your program. I think if you look at agrotech foods, again, clearly, that's the stock which is now essentially looking at the snacking sector as far as the Indian Western snacks are concerned, and we see a huge amount of contribution from business would increase on account of this. Currently, they're at about 24%. This should go up to about 30% by 2020. You have a younger taste which is getting shape now in India as far as the youth are concerned. We have a better snacking appetite for the consumers, and I think looking at the greater contribution from the foods business, as I said, 30% is what is expected by 2020 on account of Western and Indian snacks. And we'll expect this to increase to about 50% in the next 5 to 7 years. So clearly, being margin accretive, enjoys 7 to 10% higher margins on the snacking industry. So that's a great pick for us again. The other stock that I like to talk about is the Dabur, which is also in your program right now, Nantara. We spoke about Dabur. The last 2 years, Dabur's volume growth is gaining momentum with upswing in rural demand. I think rural demand is the key story as far as the FMCG space is concerned. Softening competition from Patanjali that we are seeing on account of Dabur, and on growth in its international businesses is something which we will believe in getting revenue growth and momentum in that particular stock. So clearly, driven by rural demand is the way forward. I think
Nasser, till now, at least in the last 20 years, the focus has been on brand building for some of these FMCG companies. Do you think that now the focus will shift to distribution, with the way Amazon, Flipkarts of the world are just, making any product available to everyone? Do you think the focus will shift to distribution versus brand building, or the importance of brand building and distribution both may go up?
I think that's a very important question. You see, I'll tell you, there is a clear shift today. If you look at the trend as far as consumers are concerned, there is a pure aspirational brand consciousness that is being made available, and that is obviously going to continue as the way it is. But I think the bigger important contribution generator is going to be, as far as the FMCG space is concerned, is going to be geographic footprint and distribution. I think that is also a very key component, and it's equally important in driving in momentum and revenue for the FMCG stocks.
Nasser, because we're running out of time, I know you've come here with a third stock recommendation, which has to do with Britannia, very quickly in less than a minute.
Yeah, okay, on Britannia, Nantara, we've been, this is a great story again there. Double-digit volume growth after 6 quarters is encouraging. As you see, rural demand again is still weak, but with a slow rate of premiumization, I think the stock will become more attractive. Innovation, I think, again, they're looking at launching about 50 odd product launches in the next 12 months, Nantara. And I think that's the key to their business model and momentum and revenue. And I think innovation and premiumization is something which is going to drive 12% revenue CAGR over FY17 to 20. So clearly, again, a great stock as far as we're concerned.
Thanks so much for taking out time for us. Always good to get perspective from you. There was a view coming in on